All right, y'all. Welcome, welcome. I think you guys are unmuted. Am I correct? You're
Yes.
muted? Okay, give me a second. I want to unmute. Hmm. They can unmute themselves. Okay, thank you. These are friends, so I'm good. All right, you guys, if you have questions, I want you to try to save the questions for the end of the presentation. This is like the basics of stock trading. Now, we may touch on some options and some information regarding options, but this particular course is actually going to help you be a better options trader. I know everybody wants to rush into doing options, but the truth is, if you don't have the foundation, you will not be successful at options. You know, there are things that you have to know before jumping into the options market, okay? So stock trading for beginners, we got the fundamentals. Um, Welcome to the workshop. We're just going to build a strong, simple foundation, no experience needed. And I'm doing it this way because when I began stock trading, every YouTube video started mid level. They didn't explain candlesticks, the green, the red. They didn't explain any of that. How to open an account, what brokerage to choose, why did you choose that brokerage? It was just, there was a degree of you should already know this. And when I talk to people, a lot of them are like, I don't know anything about it. I get so confused. There's so many numbers. I don't understand it. Right. So I decided to start from the basics. Um, so we're not going to do this, it's probably not even going to last until 11:30. But to reintroduce myself, Latara Harris, my focus, the way that I trade is leaps. I use leaps, and that is long-term options. I focus specifically on bottlenecks. We'll get into that another time. Um, Specifically, businesses that are focused in technology. Um, I think there's a little bit of a rush, and that's why I've been kind of pushing this. The rush right now is AI. I think that a lot of us probably can look back and see that we've missed Bitcoin. We've missed the dot com. We missed all of that where, so many millionaires were made. Well, now we're going into a new era. And I feel bad. I sat over here and I'm like, oh my God, I did all this research about AI, quantum computer stocks. Um, semiconductor stocks, and my people aren't educated. So I decided, I said, okay, let's just stick our head out, try to educate people, let them know, hey, this is the time is now. I think last year in no in 2024 or 2025, I think the beginning part of 2025, I said Trump and Elon Musk is going to create the biggest wealth gap in this in our history. And I still believe that, which is why um take a sip. Um I decided to just kind of, put myself out there and offer this very basic course for now. My goal is to have future courses. At the end of this presentation, I will show you exactly why this has to be split. Everybody wants to jump into options. But I'm telling you, as someone who's lost thousands of dollars, because that's what I did too, without the fundamentals, it is necessary to have this baseline. Recently I met with some friends that came to town. Shout out to y'all. And I remember having a discussion with them, and then I realized how much they didn't know. And that really freaked me out. So I was like, close your positions. We got to do a course. And the market will always be open. There'll always be opportunities to make money. And yes, we want to get in now, but the truth is you don't want to lose any money. You want to maintain and retain capital. Okay. So that is why I'm having this course. Now, the objectives, right now is just stock market basics, trading versus investing. Those are two different things. We got some busy people here right now, and I know that you can't sit in front of a computer all day. We are going to talk about reading charts, although I am a trend trader. I don't get caught up too much in candlesticks, but they matter. They matter a lot. Um, Managing risk is big. Nobody taught me about managing risk in the beginning, and I joined like 10 groups in the beginning, and they were all like, "Oh yeah, just get in, yeah, get in now and sell now." And it cost me like maybe $10,000 in the beginning because you have a lot of little fake groups out there, and yeah, they're telling you their wins, but they're not telling you their losses, and they're not telling you how to enter position, when to exit a position, that type of stuff. So the reason why I wanted to start from scratch is because of my my earlier stewards. They were not like this. Um, all right, so this is for educational purpose only. Um, of course, I may tell you what I do. I am very much open to telling you my ticker symbols that I watch closely, the positions that I'm in currently. I'm not going to hide any of that. I'm going to tell you what I do, and I will encourage you to do your own research. As you know, what I like to focus on is the tech sector. I'm in a really, really good positions. I made about $12,000 this previous month, and I think I actually, um, I think I posted it on my Instagram. I'm not sure, but I'm up by $12,000 this month. All right. So, this is not personalized financial advice. Investing involves risk. Please understand managing your risk is the biggest thing that you could do. Okay. This is first and foremost managing your risk. Understanding that no position is a position, patience is a position. So, and what do we call positions in the stock market? That's your open, what do you have, what you're eyeing, so on and so forth. I have several positions open right now, some long terms, some pure stocks. No, not necessarily all of them are options. Um, but yeah, so that's the biggest thing right now, just, managing your risk. Okay, so what is a stock? A stock is a tiny piece of ownership of the company. Forgive me for those who already know this, but some people don't. And I promise that I will start from scratch because, no one did that for me. So when you own a piece of the company, you can share, you can buy more, you can, so on and so forth. So that's what a stock is. It's a small piece of ownership of a company. Now, why do companies sell stocks? They want to raise money. They want to grow. Um, they want to share the risk with us, what we call retail traders, because we are retail traders. We're not hedge funds, we're not brokerages or anything like that. Okay. Um, let's see. So how do we make money? We make money a couple different ways. When the price appreciates from where you originally purchased it, or through dividends. Now, I'm going to be honest. Options contract is to raise capital. That is my position when it comes to options. So I want to raise capital for long-term holds. And that takes a lot of capital sometimes. If I needed to buy 100 shares of NVIDIA right now, it would be $20,000 to buy 100 shares. Whereas I can purchase a contract, and it all contracts come with 100 shares. So one contract, 100 shares, and this is specifically for options. So I'm jumping a little bit, but just to let you know. So the purpose for buying options specifically is so that you can, raise money for your long-term holds. That's how I want you to. It's a means to an end, okay? Dividends. There are some companies out here, and I believe NVIDIA is one of them, that pays enormous dividends. Some people live off of their dividends. And that essentially is also the goal, right? To live off your money. Let your money make money so that you can live off of it. Okay, so there are two different paths to investing or trading, or both. You have investing, which are the long holds. And if I'm being honest, investing, especially in index funds, that tends to yield the longest and the most growth financially. Because people, again, a lot of retail traders, they hop into the market and they want to go straight into options trading or something like that. And that is the fastest way to lose your money. Trading is more frequent than investing. You can invest and buy, Nvidia or SPY or a host of other, Meta, Google, and you can just really just turn your back on it. Some people say that's what they prefer, set it and forget it. Um, it's very, very important to do the foundational work. Like what's a good entry? Those two friends that I had that visited, I was looking at their portfolios and I saw that they were down. And I gathered it's because they did not use indicators. They did not buy stocks at a discount. So of course they probably bought it when it was running up. And that could cost you essentially. You can blow up your account, and that's what we call it in trading when you lose all of your money. Now, with stocks specifically, you don't lose unless you sell. That's when you lose. So when you hear people say, "Oh, I lost all my money in such and such," well, that's only because you sold at a loss. That's not because you sold, you didn't wait for profit. And so the foundation, the purpose of that, and I think the reason for that would be there's a market psychology that you have to understand, before you jump into these different stocks. You're gonna feel energized and excited when you see a certain stock going up. But it's a bad idea to hop on the plane in midair. And here's the thing, most retail traders don't want to buy the bottom. They run from the market. And I've been successful because I run to the market when there is on red days. I look at my fundamentals, I look at my indicators, and I run to the market. I look and I study to see exactly what would be a position to get into. So, and then of course, there's another way to lose money. Not just selling when the stock is down, but if you are an options trader, and you buy contracts like I do, then you can lose money if you buy too close of an expiration date, and your contract expires worthless, literally worthless. Okay. So far, I do want to ask this. Anyone have any questions about what we've talked about so far? Come unmuted if you would like.
Okay. You mentioned something about indicators. What are those, or what is that?
Indicators, they're your lifeline to um, what everyone else is doing in the market. Me and Cindy was over here trading. We were doing good at one point. We were killing it. But at one point, we had like a little, I guess, a bubble where we didn't know why is everybody bailing out on the market today? Why is the market red? Or we'll say, how does everybody know to sell at $40? Like, what is going on? Well, turns out we were ignoring indicators and along with economic news. Those were our two biggest issues. Like we were not tapped into economic news, we were not tapped into indicators, and some indicators are used across the market, across the board with hedge funds, with retail traders. And so it's a way to measure what everybody is doing, what they're doing, and what they're going to do, really. Because you have like support and resistance. So support lets you know, okay, this is pretty much the bottom of the stock. So we should be expecting a reversal. We could potentially be expecting a reversal. But if you don't know what that number is, and everybody else does, it's kind of like musical chairs in a way. You're gonna be the last one to sit down, and that's when everyone else is able to profit with your loss, essentially. So some of the most common indicators would be RSI, relative strength index, exponential moving average, which is EMA, simple moving average, which is usually 9 to 50 days. One of my favorites is Bollinger Bands, and I'll show you those at the end of the course because that has single-handedly made me profitable, the indicators, and kind of moving with the market and not going in blindly. I think I shared a text from someone who followed me on Instagram, and I said he showed me his portfolio and he was negative across the board. And I said, "What indicators do you use?" And he said, "Oh, nothing. I just use my experience." Oh, okay, Jeannie. You're a genie now because you can predict precisely where everything is going to stop. And we know that's not true. We know that's not true. Just looking at his portfolio showed me that, he wasn't in the flow with the market, right? Um, yeah, so we'll talk about indicators because that's huge. That's huge in this, and that's what made me panic and tell my friends, please sell your position, and I will put something together where we would have a discussion about this, okay? Because I realize they don't know enough. Okay, so we'll talk about that, and that is an extended conversation in and of itself. It's very detailed, it's very mathematical, it's very scientific. So that is something we will have to tackle, and it would be, probably I'm going to go in not into great details today, but I'm going to show you what I'm talking about. I'm going to show you a few. All right, so there are pros and cons to everything. The pros to long-term investing. We all want quick money. That's just, and that's why people get into options trading. A lot of people don't want long-term investing. They think their, 401ks it does that and IRAs and stuff like that. But long-term investing, less time and stress day to day. You don't have to pay attention to the market. You don't have to monitor, what you're doing. You can set it and forget it, right? It historically, the market is always going up. It's always going up. If you do your research on just the S&P 500, you'll see that yes, it may dip down, but it also goes up. So it's always like like a stair step effect. Um, and then compounding works for you, or letting it compound works in your favor. So you can actually just set up investments on a monthly basis. You can, buy S&P, which is I think running right now $700 a share. S&P 500, the top 500 companies in the U.S. Um, so you can invest that way if you don't really have time, if you have no interest in learning any other way. I wouldn't say have time because I'm a busy person too, but you can set options too. Like you can I would say options and contracts. That's the same thing, okay? Um, the way that I do options, you can set it and forget it. I just so happen am at a desk all day and I can look at my stocks, but there have been times that we've been on trips or I'm driving in the car, I'm getting on an airplane and I'm up by 19,000. So I need to set my stop, my limit sale. And because I want it to sell when I'm in midair, you know, and I may not have access to it. So or access to the internet. So you can pretty much treat a contract the same, and I'm going to tell you how later, okay? All right, so some of the cons of long-term investing, slow results. But again, over 25 years, if you take an options trader and an investment trader and you put them together, the investment trader definitely will have more money because retail traders just do not take the time to, number one, educate themselves. Build it, really, you have to pay your tuition to the market. I paid my tuition to the market, which is what qualifies me to somewhat, teach this at this point, right? Um, and it does require a lot of patience, a lot of patience. Um, let's see. Now, short-term trading, faster results. Your heart is pounding. You're excited with the rest of the world. And, but it almost gives people, and I know you guys have been to the casino or something like that. It gives them that type of anticipation, which it shouldn't, because um, I can tell you without a doubt that, going to the casino and trading are two different things. This is scientific. I mean, that is too, but this is very it's something that you can learn. It can be taught. All right, so potential faster results, more chances to act upon opportunities, more time and attention needed. So that's the cons. Higher risk and more emotional ups and downs. That is the cons of short-term trading. You don't, short-term trading does not necessarily mean options contracts because you can buy 100 shares of a stock due to go parabolic, um, yourself. You can, without, going and getting an options contract, you can buy them outright and then sell it at its high. You can do that. Okay, so candlesticks. Now, I'm not, I tend to, I want you guys to understand what it means. Green is good. We know green is good. Um, the body of the candlestick, which is the wider part, is the start. And the close is the start or the open. The close is at the top because that's where it closed on the time. And the wicks, you call those long lines, those are wicks, okay? The thick rectangle, it shows the range between open and close prices during a specific period. And I tend to use both 5 minute chart and the 4 hour chart. 5 minute chart is a lot of noise, and I only use it for intraday positions, like entering a position on that day. The wicks. Now that thin line, to me, the wicks are the noise. It's the noise, but it also tells you the potential of, where this stock could be headed. What's the next high? What's the next low? Um, so you could use the time periods specifically, um, represents 1 minute. 5 minute chart is very, very common. Day traders, they use 1 minute, they'll use the 5 minute, they may even use the 15 minute. Swing traders. Swing traders are people like me who I don't trade every day. I don't trade every day. I may enter a position and I may hold that position weeks or months. Um, so, swing traders, they'll use the 4 hour chart, they'll use the 1 day chart, they'll even sometimes use the 1 week chart because we kind of want to ignore the noise of the 1 minute chart and the 5 minute chart or time frame. Um, so the colors tell you instantly whether buyers or sellers were in control during that period. So of course, buyers are green, sellers are red. You have your bears and your bull. I am a bull. I don't do well with bear situations where I'm betting against the stock or betting that a stock will go down. So I'm always in bull mode. So the green versus red. The color is the fastest way to read what happens. So you don't have to memorize necessarily because if my biggest thing is becoming a trend trader. You can actually just draw your little line that goes up, and I'll show you that towards the end. So you can see where the stock is trending, whether it's trending upward or whether it's trending down. If it's, let's see, close was higher than the open, buyers were in control, often called bullish candle. If the close was lower than the open, sellers were in control, often called bearish. So you have people, you have the what are positive patties or negative Nancy's. Um, and that's how you are able to kind of determine whether, what the stock is doing. And of course, the longer the time frame, the more of a glance you're able to, capture like where exactly are we in this stock? Is this stock going up? Is this stock doing its thing? And we'll have like something that towards the end. So I want you guys to see it for yourself. All right, now, why candlesticks are so useful. You see the full range, specifically, in higher time frames, 5 minute charts, and not even 5 minute charts, I'm sorry. 4 hour charts to 1 day. You see what this stock is doing. And you see the battle. You see the battle of the bears versus the bulls. You see who wins the battle, and that's what those candles tell you on the 4 hour chart, 5 minute chart, or 1 minute chart. You can spot strengths and weaknesses. You can establish the resistance, meaning this stock may have a difficult time going past this specific price point. And you'll see it push up towards that price point. Usually I look for 2 to 3 push up. And once I see that, I know that okay, this it may break resistance. And if it breaks resistance, that may be a cue for me to number one, either stay in, or I may want to buy more shares. There are different reasons why you want to do that. Um, if it pushes past resistance. Now, support. Support means, and there are different levels of support. There's institutional levels of support. And what that means is, okay, we got a lot of companies that purchase this particular stock, maybe thousands, millions of shares of this stock, and they're not really interested in selling just because retail traders are panicking, right? That creates actually liquidity for them when they buy at, let's say, $200, and because it's at $200, retail traders run the stock up to $400, and then of course the company, they may buy additional shares to kind of push the stock up a little bit more. And so now the stock is $300, $400. But when that huge company decides to take profit, even a little bit may trigger a sell-off from retail investors. So that creates a support and resistance, right? So support means, and I'm only really interested in institutional level support because I know that they're gonna defend that area of the stock. So if they bought in at 200, they're not interested in losing at $195. Does that make sense? I'm going to stop. I'm going to just take a pause right there because I want to know if you guys have any questions so far. I hope I'm explaining this good because I can go too fast sometimes. Um, okay. All right. So, and we talked about price movement, and I love the charts on this. Of course, you've seen this yourself, I'm sure. There are 3 different price movements. It can be in an uptrend, momentum, downtrend. And an uptrend means prices are generally moving higher over time. Generally speaking, the market is always in an uptrend. I don't care how much they tell you that, oh, it crashed. It's never going to crash like, beyond what 2020. Occasionally we look up and we'll get a crash like that um, due to the pandemic. Remember that. So up for the most part, the market will remain in an uptrend. More money, more money. Downtrend, you can see where prices are generally moving lower. Um, Most institutions, they don't necessarily yank their money out. Okay. If you're not, I'm going to ask that if you're not on, hold on. I think I hear somebody. Mute your phones, mute your thing for me, please, if you don't have any questions. Thank you. All right. So downtrend and sideways. You can actually make money uptrend. You can make money downtrend. You can actually make money side trend. Um, and there are a plethora of different ways. There are, spreads, debit spreads, um, credit spreads. There are puts options. There are call options, and those are contracts. Okay. So there are different ways. There's a saying that the market has, I absolutely love. It says bears make money, which means the downtrend. Um, Bulls make money, which means the uptrend, but pigs get slaughtered. That means do not enter this market being greedy. Be number one, patience is a virtue, right? And I'm going to be honest. The one reason why I have taken so long to even do this course is because you cannot regulate other people's emotions. And it's very, very kind of frustrating for me when, I recommend a stock, or I'll recommend something, and number one, they do something else, something completely different. And they do, and then they want to, send me a bunch of messages. I'm gonna tell you a little story. I had this one girl, not you, Doris, but another girl who works with me. Last October, I told this young lady, I said, I think we were up like 50K or something. I don't know. But from this stock me and Cindy had put in, me and Sincere, my daughter, had put in. And this girl, very interesting. I told her about it. I said, listen, I only trade leaps. And I'm going to give you just like a brief description of leaps. Leaps are contracts that are out a year or more. I like the comfort level of that. I like knowing that my contract won't expire in 3 days or 2 weeks or 3 months for that, because I want opportunity for the market to come where I need it to come to be profitable. Leaps are a lot more expensive than, and you'll see this for yourself, and you can do what you want to do, but rest assured, you'll be calling me saying, how can I get out of this position? I'm like, who told you to get in that? That's crazy. But anyway, I told her, I said, this is what I did. And she was like, oh, she went home and she said, my son trades. And he said, oh my God, mom, she's insane. She buys money, way out of the money, and it's out 2 years, and that's crazy. But he's not profitable. I do what works, right? And I do what works year after year. It works for me. So I'm only, I can only tell someone what I do. And she, so of course, this particular stock is highly volatile, very volatile. And volatility is actually good in the market. That means it moves. And that means if it moves and it goes low, you can buy in. If it goes high, you can sell. You want volatility. You don't want a stock that's not moving, you know? Other things to look out for, which is volume and a few other things, but you want a stock that's moving. So this particular stock, we love this stock. We hate its leadership. Um, AI in particular needs this stock. It's SMCI, Super Microchip Computer. AI needs this company. It provides an infrastructure that is competitive. There are not a lot of companies that do it, right? So we love this company, but we're also used to its volatility. And so I'm okay with being down $5,000. I have taught myself to stomach some dips. Now, of course, I'm going to look at that red and say, man, if you would have waited maybe 3 more days, you could have bought 50 more contracts with that $5,000. But you win some, you lose some. You want to win most, though. You want to be, at least 75% accurate. And so with my portfolio now, I think I maybe have eight that are profitable and two that are in the red. Am I concerned about the red? No. Why? Because I get my contracts way out and I give it ample time to come to me. All right. So this young lady, boy, she just went back and forth. And I was like, oh my God, I just really don't have time for this. I'm so busy. I was like, why did I tell her about this? So, it dips down and she's like, it's like five, and then she comes back, she says, well, my son decided, he told me to get a contract that expires in March of this year. So here it is, October. If it expires in March, that means it's not a leap. That means you're doing your own thing. Right? So she and she's down and she was like, man, my son, he's stubborn, but he's right. And I was like, well, he's not right about your position because you're in a March contract. I told you to buy December. I told you to buy January of 2027. Why are you in March of 2026? And I actually said that when she purchased it. She was like, I bought the March one. I said, I don't do close contracts like that. So Godspeed, with you. And so, sure enough, as predicted, um, buying the September and the December contracts, along with the January 2028 contract for the same stock. I think I ended up having like 172 contracts total with that company. Very expensive and a lot of bloody murder on the screen when the company got in trouble with the DOJ, Department of Justice. And a lot of bloody murder on the screen. I call it red light therapy. Just put your face close to the screen. A lot of bloody murder. But I was like, I know this stock. I know this stock. And I'm going to be disappointed for months, maybe, but I know the stock. And sure enough, after her March contract, May comes and the stock takes off. I mean, from the bottom, $18 per share up to, I think, and correct me if I'm wrong, 53. Was it $53? Doris and Mark, I know you guys were watching it too. Correct me if I'm wrong, but it takes off. Taven, I know it, you were there too. It takes off. And had she done precisely what I said, depending on the amount of contracts that she purchased, meaning, don't buy anything that close to, March's contract, she would have been crazy profitable for both September and December and January 2028 contracts. So moral of the story is, um, I think I started telling this story because she single-handedly almost had me not telling anybody anything. And I was like, I just cannot control the way people regulate their own emotions. And I can't teach patience. So how do I introduce people to this? Because it is very lucrative, right? Without being emotionally responsible for them, right? Because if I have faith in something, and I do a lot of research, a lot of research. If I have faith in something, then even if it goes down, I'm speaking back to it. I'm looking at it and I'm saying, you know what? You know what? You're going to go up, period. You're going to go up. You may be down now, and I'm not going to sell at a loss. I'm going to hold you and I'm going to let you come to me. Come to what I want you to come to, come to me, whatever my trading plan is. So patience, first and foremost in the market, patience. I think I started this conversation saying that um, patience is a position. I know someone who traded 4 times in 1 year, just 4 trades. They made $80,000, just 4 trades. Patience of Job is what I call her. She has a patience of Job. All right, so we touched on support and resistance earlier. Support is a price level where a stock tends to stop falling and bounce back up like a floor. Resistance is a price level where a stock tends to stop rising and pull backs down like a ceiling. Very, very important to know your support and resistance level. There are indicators that people use for support and resistance. Um, RSI, relative stock index, or I mean, relative strength index, and um, Bollinger Bands. So they often retail traders, they'll use it as support and resistance, but really that's not just support and resistance, okay? We'll get into indicators because those are your best friends, really. And there's so much more to learn, which is why I kind of wanted to start from scratch because it builds. All right, volume. Volume is how many shares are being traded. Now, here's the
Let
thing.
me light up. Good.
Go ahead. That's you, Mark? Mark, I think you and Doris back there talking, okay? Love you, mean it. Okay, so volume is volume is how many shares being traded. That goes both ways. That's buying and selling. So that's
It's
not
not
just
hard.
how many stocks are being sold. It's very important to see that if there is a high volume and it's a red candle, that means that there's a lot of selling going on rather than buying, okay? Rather than a green volume stick, okay? All right, so Hold on, letting people in. Hold on. Give me 1 second, y'all. All right. Okay, so high volume means a lot of people are buying and selling. A big price move with high volume is more meaningful. So it has to mean something, right? You're looking for to decode what people are doing because you don't want to go against what other people are doing. You want to move with the market. Low volume moves can be less reliable. Think of volume as the energy behind the price move. Okay. All right. First and foremost, this is so important. Preserving your capital I cannot tell you how many people blow up their account. And I don't even like to say blow up the account because it sounds like you're playing a video game. But unfortunately, that is the term that retail traders have adopted when they lose all their money and have to start from scratch. We don't want that. We don't want to blow up our account. We don't want to put $10,000 in, and because we lack patience and understanding and movement with the market, you suddenly are on the opposite side of where you want to be, and you now have no money. Again, you only lose when you're in stocks, specifically if the company goes bankrupt or if you sell your stock at a loss. If you hold them, it may be 6 months, it may be a year, maybe 2 years. But if you can hold that position, that stock may just move in your favor, and more than likely it would because, in general, the market is in an uptrend. You want to preserve and protect your money. Preserving capital is a position as well. All right, so we've already touched on what is an option, but I do want to kind of go into details. An option is a contract, a kind of contract about stock's future price. It gives you the right, but not the obligation to buy or sell a stock at a set price. I want to show you that in a minute. It has an expiration date, a deadline. That is so important because a lot of people will buy expiration or expirations that are very close. Retail traders who have not done their due diligence and try to learn the industry, they always buy close contracts. And that's nothing but money for the person who's selling it, who's giving them the option to buy it long term. Close contracts are cheaper, and that's why they do that. Leaps, they are not as cheap, okay? And so, I buy leaps. They have cheaper leaps. And I think leaps are just better, or I would say safer than anything. Um, it has an expiration date or a deadline, meaning it's almost like renting a house. You have a lease and everything, right? You are occupying that home, but it doesn't belong to you. You don't really own the home, but you have it. You own it for a set of, not own it, but you're renting it. You're occupying it for a specific amount of time. That can be, for options, it could be a week, it could be, a month, it could be 3 months, it could be a year, it could be 2 years. I've gone as far as to get options out 2 years because if it runs in the course of that way before my expiration date, that's nothing but money for me. And we'll explain how. Options can cost much less than buying full shares. Now, the benefit of buying options is I gave you the example of purchasing Nvidia. Nvidia right now is at, I think, $210 per share or something like that, $214 per share. It would cost me over $20,000 to buy 100 shares. Well, with an option contract, each option contract comes with 100 shares. And if it comes with 100 shares, it's at a discount. It's at a premium price. That's what they call a premium. What is your premium? Um, so for example, I'm looking at some market information right now. I could buy a contract for NVIDIA that is at the money. We'll talk about that in another time. For 200, well, for $4,135. So instead of paying 20,000 for 100 contracts, I will pay $4,100 for 100 contracts to occupy 100 contracts until, remember, we talked about the specific expiration date, until the one I just selected was September 27th expiration date. So what I'm saying is I am buying, I am almost, betting, or, I believe that NVIDIA will be above $210 by September 2027. And it's costing me $4,100 to lock in my position. Okay. It's costing me. So that's substantially less than what you would pay for 100 shares of NVIDIA. We're going to kind of go, I'm going to show you guys that in a minute too. All right. So remember we talked about the Bears and the Bulls. So calls. I'm more of a call girl. I have, some people, they do good with puts because they're negative Nancy's, but I'm more of a positive person. I think the economy will go up. I think the stock will do well. I really like believing in companies. I believe in the company in specific companies, at least, right? So a call is you think the price will go up. That is what a call option is. A call gives you the right to buy, but not the obligation. Remember, a stock at a set price. Because when you buy contracts, you're also saying, hey, if I want to buy this contract, or if I want to buy this stock from these 100 shares from the market or from the seller, if I want to buy this, um, I'm locking in that I will buy it at this specific price at, 210, for instance, right? But people who trade calls, who trade options, they're not holding these positions to expiration, especially not me. I tend to hold them when the stock goes parabolic, when it's up, when my contract is now worth 10, 25, 7, $8,000. That's when I will sell. I will sell it and I will get my premium plus what the contract went up to. So, if I bought the contract at 5,000 and now the contract is worth 10, I'm going to sell it for 10,000 and I get the pocket, my additional 5,000. So I'm a call girl. That doesn't sound right. But I am a call girl, okay? But okay, so a put is you think the price of the underlying stock will go down. You are a negative Nancy. You are a bear. There's nothing wrong with that, but okay. A put gives you the right to sell a stock at a set price. If the stock falls below that price, your put can become valuable. Same thing with a call. Your call, if it goes beyond that 210 and now it's worth $250, or I get that difference times 100. Because remember, one contract has 100 shares. And you can buy multiple contracts. I tend to go crazy with contracts. I will buy, I think one position I'm in right now, I have 65 contracts, which means I control 6,500 shares of this stock, right? All right, so why use options and the risk? Why traders use them? Because they're cheaper. It's cheaper than buying full shares. And you can mimic the stock itself by buying leaps, buying out a year or two. So it moves closer. They're not indicators, but they're the Greeks is what we call it, and that's going to be a whole nother class. Um, because with contracts come what we call the Greeks, and that's delta, theta, vega, rho, all of those. That affects the underlying the price of the contract. And that is so pivotal to learn before you jump into contracts. Okay. So why traders use them? They cost less. They can offer bigger potential returns because if you can't afford 100 shares of Nvidia for 20,000, but you can afford, a contract for 41, then some people may not buy the 20,000. Maybe they'll buy 50 shares for half the price, right? But they really want 100 shares. So yeah, the option would be to get to buy contracts or buy options. And they can be used to manage the risk of you may not want to risk 20,000 on Nvidia, even though it's a $5 trillion company. It's still risk. Believe it or not, the world will still say, and we have to still say there are risks with trading. The world can collapse and now you're out $20,000, right? Only if you sell. They can be used to manage risk on other positions. So now the risk options can expire worthless. The reason why this is an issue is because, old girl, the story I told you earlier, she had her contract that expired in March. So if she's no longer in that position because she did not follow directions, which was to get a September 2026 or December 2026, which we are not near yet, right? Or January or 2027 or December 2027, she didn't follow that. So her contract expired worthless. And I'm so intentional with the guidance that I give or any type of information that I say that I'm in. I'm so intentional. I say I don't do anything less than 6 months for the most part. For the most part, unless a stock is going parabolic. Um, and so she just decided to listen to her son and she got that March and that wasn't enough time. But what was enough time was the September contract and the December contract that went crazy. Prices can move quickly and unpredictably. And we all know what kind of, affects the market, which is why I'm always plugged into CNBC and, all of these different different issues, geopolitical issues. And like we know what's going on in the world because you have to know what's going on in the world if you're going to trade. Being, ignorant to what's going on will lead you to getting out of the market fast, slower than everybody else. And now you're on the bottom. Your stock is at the bottom. Options involve more risk than owning the stock outright. And that's just true. I have long holds. I have 100 shares of stocks. Um, and I'm not even worried about those stocks. If they go, if the market crash or if there's something happen, which people use that word, the market has not crashed a lot. I think we consider 2008 a crash. They may consider 2020, the pandemic, a semi-crash or something, but the market really doesn't crash. People are just extra and theatrical, and it's just not true. The market may consolidate, meaning or yeah, the market may consolidate and kind of trade sideways for a little while, but it didn't crash. All right, so mistakes to watch out for, part one, chasing the hype. My dear friends who are in positions that are negative, they probably bought because the stock was shooting up fast, and they literally got on the airplane in midair. And you never see nobody get on the airplane in midair. You want to wait for the plane to land. And what do I mean by the plane to land? That means support. You want to buy on first support, second support, third support, because there are different support levels. And when people, try to get in the stock mid-air, then they're going to be their liquidity for the rest of us, really, who got into the stock when the plane was on the ground. And you want to ask yourself too, like, am I getting on the plane while it's in the air? Like, how that's like suicidal. That's crazy. Um, Another thing you want to do is trading on emotion. So it's so important to stick with your fundamentals. Look at your indicators, journal. I'm huge on journaling. I have a journal in front of me right now. To kind of, document where I am in a position, how much I'm up. Um, what am I going? Am I going by my trading plan? And that's something we'll have to talk about later. But trading, it's easy to trade on emotions, and we don't realize it because we don't know market psychology. But think about it. You want to be in a stock when it's going up. You don't want to miss the opportunity. That's FOMO, fear of missing out. And we can't help our emotions. When we see that stock going up, we want to get on the train. But that is like the biggest mistake you could make because you're hyper, you're excited. That is trade psychology. That is you emotionally trading. And then when it goes down, you're depressed, you know, but you should be excited when it's down. You should be excited if you're not in that position, right? Because you get the buy in at ground level. Over trading, buying and selling too often without a clear reason. Oh, I'm going to buy this one. Oh, I'm going to get that one. I'm going to buy this. Oh, this one is taking off. My nephew, I am afraid to guide him because he feels like you with limited money, and we all have limited money, right? He feels like, oh my God, I could get in SpaceX. And I was like, well, let me just slow you down a little bit. SpaceX, number one, is a new IPO. Initial public offering. That is when you first get on the stock market. And new IPOs have restrictions. You could, say, oh man, I wish I would have gotten in SpaceX when it was 65. What was it? 120? What was it? 135. 135, which I did buy, at that level, but that's just long-term stuff for me. I don't care. I'm just going to keep putting in. I'm just going to buy the stock outright and just keep investing in SpaceX because I believe in about 10 years my grandkids will love me for it, my future grandkids. Um, but my nephew, he wanted to just, oh, I should have got it. Oh my God, T. He calls me T. The stock is at $215. I knew
Yeah.
I should have bought it. I said, but you wouldn't be able to do
Ain't
anything
nobody
with
on here. Your family.
Oh, I need to go to.
Okay.
You going with?
it. Mark,
Huh? How you going?
Mark, is that you again? Let me see how I can mute you because you and Norris over there having a whole little chit chat. So anyway, my nephew, he was like, you
Latara,
should have
that
gotten
is
in.
not Mac.
And I had to educate him. Cindy, please help
Latara,
me mute them. Yes, yes. Can
that's
you hear
not
me?
Mac something. Yeah, that's not Mac. It's not him. So double
Who that
check with the
is?
person.
Oh, I'm sorry. I'm loud with that. I'm sorry. I get a little too comfortable. Okay, give me a second. Let me try to Mark. Thank you, Doris. I'm sorry, Mark. Love you, mean it. Whoever that is, please mute yourself if you don't mind. Thank you so much. I have not learned this stuff at all. This Zoom thing. Okay.
It must be me.
Oh, yes. Thank you.
I
Appreciate you.
don't, I don't know how.
Who is that? Is that my Mercy?
That's your auntie.
Oh, this Auntie. Oh, Lord, Auntie. Love you.
Love you too. I'm trying.
It's okay. I'm gonna find you, okay?
Okay.
All right. Okay. So my nephew was like screaming about not missing out on SpaceX, but here's the truth about IPOs, okay? I told him, I said, you really didn't miss out on anything because if you would have bought in and you immediately sold because it was at $215, you would have lost, you would have had an IPO ban. So with all brokerages, when you first invest in the stock market or in the IPO, they're going to ban you if you cash out before 30 days, 6 months, 3 months, whatever their guidelines are. So that fear of missing out will have you not really knowing what you're doing, An IPO ban means you will not be able to invest in a new IPO. Um, So there was no missing out really. And a lot of people are waiting until December when IPO bans expire from the initial public offering. All right. Sorry, Mark. Auntie, I'm trying to get to you, okay? She's about, I don't know.
Okay.
All right. So ignoring the risk, skipping safety steps, not having a clear plan, that's also a huge issue. Oh, wait a minute. Let's go back. Okay, so mistakes also, this is mistakes to watch out. Part 2, buying without research. I research. If you lived here, you could pass my bedroom at 3 a.m. and you'll see me watching YouTubes of some of the most brilliant people who have portfolios that I want, $2.5 million, $5 million, $10 million. Brilliant, show you their portfolio, all of that good stuff. Panic selling. Boy, you are a hedge fund best friend when you panic sell. That means you see red, the market's going not in your favor, and you're like, oh, I'm going to sell. And you will sell every time at a loss. You will never be profitable if you don't have patience. We already talked about fear of missing out and no plan at all. That's insane. That's absolutely insane. And it made me panic when I was talking to my friends who, came over from out of town, and I was like, there's no plan. We haven't even talked about a plan. Like, when are you going to sell? Like, what's your, what are you going to do? You're in this stock now. What's your goal? Oh, you want it to reach the heavens. You can't do that with an option. You have to have a plan. You have to plan, like when I get 50% up in this particular, or when I'm, 10 times with leaps, you can expect 10 to 50 times what you put in, and which is why I buy leaps. But with shorter contracts, you may want to just, and they call that scalping. I've scalped before, especially on trips when I want a quick buck to pay for dinner. Me and Sincere both have gotten into a position, say, oh, STK, whatever, is going to cost us $300 with the food we want to order. So let me scalp. That's not, something I necessarily tell you to do, but listen, I've done it. I scalped. That means I got into a stock when it was in momentum and I got out. I got in and I got out. Made money and got out, and then sent the money to my account, my bank account, because you don't have to. A lot of people think when you're investing, you have to leave money over there. It got to stay forever. No, that's why we're talking about the two different types of investing. The investing where you hold for a long time. And then of course you have your trading. That's more of trading. All right. So I hope you guys have a pen and some paper, or you can take pictures or something. Your trading plan. You have 6 building blocks to a trading plan. You have to set clear goals. So before you even enter a position, you should say, I want to buy at first support or second support. Me, I like a deep buy-in, right? I want it to be almost at the bottom. I want it to be below 30 RSI, and I'll show you that in a minute. I want it to be on the ground for the most part, because that means when it goes up even just a little bit from the ground, I'm making money. You gotta assess your risk tolerance, and really it boils down to your level of patience. Risk tolerance would be, oh, I'm not interested in losing any more than 10% of my capital. You always want to leave money available for capital, because you want to make sure that you have something when it's time to get into a stock. You want to make sure you're in that stock. You want to make sure you can buy it. You have not just put all of your money in one stock. You need to have an entry strategy, decide when and why you'll buy. I am AI driven. That is my priority when it comes to trading stocks right now. Everybody's saying, okay, what about crypto? Well, relax, everybody. And this is why I say that. AI, billionaires are pouring gazillions of dollars into AI infrastructure, data centers, and stuff like that, right? That means they're taking money from somewhere in order to build these huge data centers that are needed to sustain and grow AI. AI is not just you asking Chat GTP a question or telling you to do a picture, you change my picture to some type of 1920s, whatever. AI is artificial intelligence helps with medical, extremely profitable with medical. This is going to be like groundbreaking. Quantum computers is another area. Semiconductor stocks is another huge area. You have to prioritize your sectors. What are you going to focus on? My focus is tech because that's just where we are. In the land of the living, we are in the tech environment. And because we have limited money, my goal has always been to get a stock that will go have heavy momentum first out of all sectors, right? So you have your healthcare sector, you have your consumer sector. I'm not studying none of that. Well, not really. Well, biotech. Biotech is a healthcare that I'm interested in big time. But anything else like consumer, like Victoria's Secrets and all of them, they say buy what you love, but sometimes you just got to be smart and buy a stock that the world is focusing on, concentrating on at this moment, and you all know that is artificial intelligence. I think after artificial intelligence, quantum computers is about 4 years away. If you look up any quantum computer stocks, you are going to see what we've already missed out on. And I regret that last year I did tell y'all, and y'all probably ignored it, that, hey, last January I said, IONQ is the ticker symbol. That is the symbol for the company, INQ, is going to skyrocket. It already skyrocketed. We were late to the party. It was like $3 per share or something like that. And then out of nowhere, it catapults to $70 per share within a matter of months. Now, if you would have bought 300 shares of those, you know what I'm saying? You would have had a substantial amount of money. But we are still early in the AI age. We are still very early. They are experiencing bottlenecks, and bottlenecks are when everything is going good and it's on the wide part of the bottle, and then we get to a restricted area where everybody's trying to squeeze out. The bottlenecks are what I invest in. I look for bottlenecks. I want to know what are the challenges with AI? What are the challenges with these data centers? And I found out that it's electricity because they have to run 24/7. They cannot survive or be sustained on our grid, on our electrical grid. So I look for bottlenecks. Another bottleneck is, oh God, what's another bottleneck? Wait, hold on one second, y'all. I'm going to pull it up. Besides electricity, compute. The frequency, how fast the processing is, the wires for the data centers. I mean, think about your own home computer. How many wires you have connecting the CPU with the monitors, with this and that. So you have companies that specialize in that. Cooling is huge because these systems, unlike our home computers, they cannot turn off. They cannot turn off at all. So if they can't turn off, that means they must be on 24/7. And that means it needs to be cool. It has to have the ability to self-cool. And then and that's why you have companies like SMCI, and different companies like that offer cooling solutions for these data centers. Now, I want you guys to write this down on your free time. I want you to look at Google. Google is free. Look how many, just how many data centers are being built right now. And the US actually houses the majority of data centers. So you want to look at, what's going on. And that you'll see, okay, where these data centers are going up, that means infrastructure is needed. That means companies are needed to provide infrastructure. And if companies are needed to provide infrastructure, then their capital, right, is going to go up. And if I invest in those companies, it's a partnership. My money, my capital is going to go up. That is the way that, pretty much it goes. I think it's one. Hold on. Here it goes. Found it. Okay. So you see the thought process. I want to slow down long enough so you guys can answer or ask questions. Do you have, oh, my son, who is this? Oh, I love that. Are building these, that's their career. So I'm glad you shared this. I love that for me. I love that for y'all. So you know what I'm talking about, right? Do you guys have any questions so far? Come on, don't be shy.
Good morning. I have a question. I'm the one who told you about my son and nephew
Yes.
who are building these data centers. So would it be beneficial to invest in the actual data centers or the components to keep the data centers running?
Beautiful question. So these data centers are built by hyperscalers. Hyperscalers are Meta, Amazon, Google, Nvidia, Tesla, right? So they're considered the Mag 7, Magnificent Seven, the multi-billion mega cap companies. So yes, you can actually absolutely buy Tesla. You can buy Google, you could buy Nvidia, all of those different places. But here's the thing, they're already trillion-dollar companies. So and I still believe that trillion-dollar, multi-trillion-dollar companies can become a $5 trillion company can become a $10 trillion company, which is why I feel like Nvidia is undervalued right now, right? I'm a huge fan of Nvidia. So, but the components, let me just tell you, let me give you a little information on the components. I am in one called Micron Technology. And Micron Technology, people are, US is obsessed with a home-based company. So because and the reason is because, with geopolitical tensions, they don't want China, providing all of these different components, right? And then we subsequently are being monitored, or our information, our data is being stolen, we're being compromised. So the US is actually encouraging companies to bring everything here, get everything from here, the components, if you can, just get everything from the US. And one company, and I'll show you that in a minute, Micron, well, several actually, I mean, SanDisk included. SanDisk went from $35 a share. $35 a share last January. And this, right now as we speak, it's at $2,100 a share. How, you understand? So, but yet Nvidia did double, because last January, Nvidia did go down to $100 per share, I think. And then it went up to $225 per share. But do you see the growth potential between the components of data centers and the actual creators of the data centers? I'd much rather have one share of $35 SanDisk that went up to 2,000 than the one that went up by 100, So the components, the bottlenecks are really, I think, if you're a long-term investor, absolutely. I would always say put your money in Nvidia. This is not a financial advice, by the way, but I love Nvidia. It's at the top of my list for long-term investments. Absolutely. But, we're prioritizing capital. We're prioritizing sectors, right? So you want to make sure that all your trading plan has all of these building blocks. You have to have a why. My why for AI sector is that they are desperate. They don't understand. They can't seem to conceive that your huge data center is it has a problem, and that means the problem is we can't power your data center. So what are we going to do? We got to look for ways to power this data center because AI is not going to stop for anybody. And so in Virginia right now, if they get like a phone call, the data centers, because most of them are concentrated right now in Virginia due to um, AI being specific to the military and the government. So the proximity of data centers are concentrated in like Virginia in that area, right? So and that's the reason why. But now they're all over. They're being built. And I want you to pull this up. Just pull up. I will probably send you guys a link for YouTube videos so you can see for yourself. They're popping up everywhere. And they did not think, oh my God, we have a problem. We can't power. If Virginia Power or whatever gets a phone call and says, hey, the grid is about to explode, y'all got to come off. And that's exactly what happens on a monthly basis. The data center runs its generators, and because it would shut down the power in 3 states, you know? So it's important to know like what are the bottlenecks, and I'll show you some of the bottlenecks momentarily, but nuclear energy is the savior of that particular bottleneck, that what they want. And if I'm being honest with you guys, that's exactly why we're over there fighting Iran, because I don't know if you've seen the inauguration last year, but Trump had every hyperscaler owner in the building. And I bet that they got in his ear and said, "Hey, we trying to build these. Hey, we trying to build these data centers. We don't have any nuclear energy. We don't have enough uranium. And Iran is bountiful in uranium. I think our president actually said, "Give us your uranium." I think he said it. I like most often it's presidents are not that upfront and personal, right? But he actually said it. We need your uranium, and you want to think of uranium as vibranium for Black Panther. Okay, it powers everything, right? Um, so you want to see what the solutions. You want to research the solutions of the bottlenecks. What is stopping them from being great, because they are going to do whatever in their power, whatever it is in their power to get there. So some of the tools that I use, of course, brokerages. A brokerage that I use very commonly is Robinhood. I do like to chart off of Webull. I do want to move some of my stuff, most of my stuff over there, Webull. Um, Stock screeners, most brokerages offer screeners. And what that means, what does that mean? You can screen for certain stocks. You can say, I want a stock that is in the tech industry that is under $5 or $10 or $20.
Mm.
That is a, I got it. That is a, let's see, hold on. I'm screening for a stock that is under $5, that is 100% buy rating from analysts. That means they are saying buy this stock now, like some of the most brilliant minds. So stock screeners can be your friend. Financial news. This is like the most important, because these are, for me, it's opportunities. I can wait for the financial news so that I can get into a position. I want to be able to, I want to wait for them to make the rate announcement, for the Federal Reserve to make the rate announcement on whether or not they're going to cut rates, right? Because people tend to run away from the market, and right before he makes the announcement, the stock is low, and you can buy in and live happily ever after type thing. Let's see. I want to look at something really quick, y'all. Hold on one second. Okay. So economic news is huge. And I have like certain apps that I follow for economic news. Um, It gives me an alarm. I know at 7:30 in the morning, every morning. Some economic news comes out after or like during market hours. A lot of economic news that really, really matters is before market hours. So I'm always kind of monitoring the monthly news, the quarterly news, and then of course the geopolitical news. I want to know what's going on. Huge catalysts. Catalysts are what we consider to be events that could substantially move the stock. And what kind of events can, substantially move the stock? Earnings. Everybody in the business industry, they want to know how profitable this company is. So the first thing I did was get into Micron Technology. And I've rode that wave to the tune of $12,000 this month. I am a bit conservative sometimes, so that's safe. Some of the positions I'm in, I have a position that is out until September of 2027. This particular technology is, I think I started talking about it, is in the US, and it solves high broad width, what is it? High broad width memory. My brain is going down. We're gonna take a break in a minute. So high broad width memory. They need memory in those data centers. They need to be able to house data. And that is a huge bottleneck, which is why that one stock SNDK, which is SanDisk stock, went from $35 to $2,000. It's the same reason why Micron Technology went from $100 up to $1,100 in less than a year. It's up 2,000% or something like that, they say, or something that's crazy. You want to create a watch list, your top stocks to watch that you're really kind of monitoring. I have mine set as the big dogs. That's what I call mine. I also have a watch list for AI, new AI that's trying to solve a bottleneck problem. I have a watch list for quantum computer stocks. We missed the best part of that, but do I believe it can be something huge that can make someone super rich in about 5 years? Yes, I absolutely do. So quantum computer is second on my list. First on my list is AI, just AI infrastructure, all things AI, everything that's solving a bottleneck for AI. Second is semiconductor stock. They are helping solve the computing issue with with data centers. And third is most definitely quantum computer stock. So raise capital so you can buy these long term, right? You raise capital via stock options. Okay, so, and then of course, charting software. Now, here's the thing. Don't be shy. Go ahead and pull out ChatGTP and Claude and all of them. Have a whole conversation. I call ChatGTP Chad. So if you hear me say Chad, just know that's what I call him. He knows I call him Chad. He's like, Chad is here to help you. Anyway, don't be shy with using AI to kind of give you a little bit more of a foundation. I think you don't have to subscribe. I subscribe, but because I have a lot of questions all the time. But you use your free chances. Use it every day. Hey, can you tell me more about da 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 da? And can you tell me more about this? Use it. Okay, why knowing the markets matter? Context changes everything. The same stock can react completely different to news depending on what's happening in the broader market. When you see all red, all down your watch list, that's the broader market reacting to something. It could be geopolitical, it could be economic news, but it is a wonderful time to kind of keep watching that stock to see how low can you go so I can buy in. Timing becomes clearer. And of course, we talked about the timing. I look at 5-minute chart only to enter intraday. But my heavy hitters are 4 hour, 1 week, and 1 day. because it cuts out the noise of that constantly moving candle. Um, you know, you trade with direction. Now, don't be betting against a stock that's going up. That is suicide. Don't necessarily buy into a stock because it's going down. You want it to consolidate down. So you want it to kind of look like it's going to stay. This is going to stay here. And the only way you'll see that is if you're looking at a 4-hour chart, 4-hour to 1 day to week chart. That's when you'll see the true price of the stock, or what, if you should buy at that level. Because educate yourself. Google is free. We'll have more of these hopefully, but educating yourself on, like, it will make you more confident. Like, I'm very confident in my picks. Even when they turn red, I'm very confident because I know the company's fundamentals. I know their 10K. I know, what problem they are solving. So I'm very, very confident in what I picked. Now, economic news, we talked about this Federal Reserve decision the other day was a huge buy-in point. I was working, so I really didn't, care to get in and get out of my positions. But had I would have probably at least one position, for example, I would have probably pocketed $5,000 for that day. Just got out on Monday, bought back in before the Federal Reserve decision, and then I would have pocketed that money. I would have bought at a lower rate, right? A lower price. Job reports, inflation, CPI data is huge. There are apps that give you notifications on when. The key is to know that it's coming before when everybody else does. You understand? You do not want to be the last person in finding out, oh my God, CPI data is supposed to come out today. What am I going to do? Oh my God, that's why the market crashed or not crashed, but went down a little bit. And then company earnings is huge, a huge catalyst. All right. So of course you want to study, you want to self-study. That's what I did. I dedicated my free time to studying the market, studying what everybody else is doing, studying what not to do. Reading books. I have a lot of books. I watch a lot of YouTube. But of course, learning is kind of making mistakes. So I learned from some of my mistakes too. And then I found this wonderful, wonderful YouTube channel that kind of helped me understand my mistakes too. So I'll be sharing that as well. Okay, wait, I'm going backwards. Let me see. Okay, so what to remember: continue learning. The markets reward those who keep studying. Did I skip one? Okay, yeah. Wealth is built over years, not days. The reason why I'm nervous for young guys they're going to go against, I mean, you understand what I'm saying? Like, they are so impatient and they see the news, they see YouTube, and they think they can become wealthy overnight. But if you go from when I liquidated my stocks and I went from the 15 up to 20 and up to 25, up to 28, then up to 30, then up to 37,000 in just a month, you understand what I'm saying? You just kind of, you're taking your time. Now, that's because I did put a substantial amount in. One particular one is like I think about $20,000 in one contract. And, it's worth it. It's out until September. And it could yield me probably 3 to 10 times that amount with this particular stock, which is MU. All right. So, I'm going to ask if there's any questions, but I'm also going to share in a minute why this class is not as we're not going to go through like the details. We're not going to hit the heavy indicators and stuff like that. I will show you and give you a general understanding, but there's a lot involved with that. This is a fundamental class. You absolutely needed it before you jumped into options. You need to know what you're doing. You need to know what the country is doing. You need to know about certain economic news and how it affects stock prices. You cannot be successful without this foundation. So I felt it was necessary to start here and then have a discussion or have another class another time. Okay. What are your questions so far? Anybody, everybody? What is that noise? Huh? Oh, okay, got it. Okay, got it. All right. Oh, I'm going to leave this up. If you want to contribute, of course, this course was free, but if you want to send me anything as a shout out, I appreciate it. You know, it does take energy and money to kind of put this on. There was an urgency for me to get you guys involved only because we are at the beginning of AI, and I felt like if I don't teach something now, my people are going to miss out. And I'm gonna be in here, you know, and y'all ain't gonna know I'm super rich, but I'm gonna be minding my business somewhere in Tahiti, okay? And I didn't want to do that by myself because I tried to take a few of y'all with me last time with the crypto craze, where I said, "Hey guys, you know, put in this coin, put in this coin." And I had a vision, and I know it was crazy, but I kept posting about it, and I think Sincere and I collectively, no, Cindy had her own, so she put like $800 in, and hers went up to 10,000. You were 18. What were you, 18? 20?
For Simi?
Yeah. No, for Dogecoin.
Oh yeah, no, I was like 17.
You were 18?
I was 18.
So an 18-year-old who thought she would never ever work a day in her life after that. And I was trying to tell my friends too, because I like to take people with me. Um, because I remember feeling like, why didn't I know anybody in Bitcoin? Why didn't I know anybody to tell me to put $1 in Bitcoin? Or why didn't I know anybody to tell me to put money in the .com in 2010, 2008? So I said, let me be that girl. Next time I will be on camera. My hairstylist forgot me, and I'm looking a little funny today. Love you, Jan. Um, but yeah, okay. So I'm gonna share my screen. Okay. Um, so here's one thing I wanted to share. Let's share. Do I want to share Webull first?
So I can see.
Okay, yeah, let me see. Okay, yeah, let's do Webull. Did they send me something? Yes, they did. Hold on. What did they send me? Where are you, Webull? Hold on. Where did they send it?
Via email.
Uh, oh wait. What do we normally, let's see. I think. Okay. All right, perfect. Minimize. All right. So we were talking about how do you get this ugly thing out of here? I'm so not this girl. Like, why is this covering? Oh, there it goes, hiding. Yeah, you got that up. Let me just see if I can just click on this. Let's click on. Oh, no.
They don't see that.
They don't see this? What do you see?
It's just Webull.
Oh, good. I need to move this
Exactly
though.
that.
Okay, got it. All right. So you see I'm already defaulted to 4 hour at the bottom. Do y'all see that? Can you see my cursor?
Yep.
Okay, good. And so these lines, I'm going to hide all of this because this looks like this is going to confuse everybody, right? Where is my eyeball? I'm going to hide these. I'm going to hide the super trend. All right, so I'm hiding pretty much everything. So this is just a bare candlestick chart. Now, these are my indicators that I use. RSI, this is relative price index, relative strength index. And when I told you that, you know, you want to think in terms of support and resistance, right? Um, I normally use another one, but hold on. Where's my little? No, I want my candlesticks. So when you look at support, you would say, here's like a little bit of a sandwich at the top. At the bottom, this is so the sandwich, the top level would be resistance. The bottom level would be support. Okay. And you have a few different support levels, right? You have the very bottom at 626. This is SPY, S&P 500. And so you have one at 67D. And then of course your first support would be 719. Now, I kind of like a deep support. I like my support to be almost, like in this area. Like I want to kind of come down because for liquidity, and we'll have a whole different lesson on liquidity. You don't want to even, most people put their stop loss in support. That means they don't want to lose any more money than this right here. And guess who can see that? The hedge funds. They can see your support levels. And of course, they're going to go where it's congested. They're going to go in that area where it's congested. Now, resistance, of course, that means, hey, the stock can be overextended. Do I want to sell when it hits 760? And you can set it and forget it. You can set it a limit sale to sell at $760. You wake up, you look at your phone later on that day. Oh, it sold my shares. Oh, look, I'm up by $500 or whatever, or 10,000. RSI at the bottom. When it reaches 70%, that means the stock has reached oversold conditions. I mean, overbought conditions, overbought. That means a lot of people, there's a lot of cooks in the kitchen. There's a lot of people who bought into this stock. The more people, the more likely they're going to start taking profit, right? And so the thing is, though, a stock can be in oversold conditions for a long time if it's in a momentum. If you look at this stock right here, MU, my favorite stock right now, it was at $311 on 3/31, on March 31st. It's up to 1,400 and whatever, 1,000, I think it was 1,133 at market close. But of course, after hours is at $1,150.80. I did not explain what all of this means, but on the right side, you see the stock price at market close. You see what it opened at. You see the day's high, what it was during that 8:30 to 4:30 time frame. You see how low it went. You see the volume, the previous price, previous day, market cap. We'll talk about market cap and everything. That's a foundation, but we'll talk about it later. Close my door for me, Cindy. I know that's the yard man. Thank you so much. And so you have all this information. It tells you everything you need to know. Like, okay, should I buy in at the low? You think it's going to bounce out off the low again? Do you think sometime that day, intraday, 5-minute chart, I should get in on a low? Yeah, possibly, right? But this particular stock has been in an uptrend. I'm not good with this one on this computer, but hold on. I want to draw the trend line so you can see for yourself. And so when you are a trend trader, you're gonna make money on the trend, right? And this one is up, 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 and away. So Bollinger Bands are one of my biggest tools. A lot of retail traders use Bollinger Bands. And so Bollinger Bands tell you what a stock could trade in between during this time, during a specific time frame. I have mine color coded because I understand traffic stops. So my Bollinger Band, the lower Bollinger Band for me means buy, buy, buy. That's green. That means go. The middle Bollinger Band means caution. You may want to slow down. You may want to buy, but you may want to also slow down. And red means, okay, now, wait a second. It's over, it's at the top of what it should be trading, right? And sometimes you'll see a candlestick that goes straight up in the air, and then suddenly, it comes down. But green, go for me. I'm gonna buy. I'm gonna buy as many I can as I can. Yellow, I may watch it a little bit just because it may continue higher. It may not. I may not buy in. And then red is you may want to go ahead and take profits. When I say it serves as support and resistance for most retail traders, even hedge funds, with huge hedge fund, it serves as support and resistance. Now, on the 5-minute chart, you see how the Bollinger Bands are a little bit more constricted. That's the noise that I was talking about. And I kind of like to stay away from the noise unless I'm buying, I'm trying to enter intraday. And this lets me know RSI is at 41%. Now, I look for my RSI to be below 30. If it's below 30, that means it is oversold. And the chances of a stock bouncing off and heading back in the other direction is very high. And that's what we want if we are bulls. We want it to go in the opposite direction. So I have seen stocks go way below that RSI. And I actually prefer to buy in when everybody and their mama is running from the market. And it's even below my 30%, my 30 RSI. And it's at 18, it's at 10, it's at 15, because I know what's probably going to happen, right? In this case, June the 16th, the RSI was at 20 because everybody, sold, panic selling because of the Federal Reserve making an announcement of rate cuts, which affects everything from you getting a loan to you buying a house, right? So I watch that very, very, very carefully, and they usually have rate cuts 4 times a year, every quarter, I believe. All right, so you see what happened. They sold at 1,019, and then it hops back up at 1,058. That's decent. But let's say you bought at 1,058, and then this. Let's go back to the bigger, because again, I use 5-minute for intraday trading, not for making my decisions. So RSI is at 20. It's in the dumps, or in this case, I'm sorry, because we're looking at a bigger time frame. This RSI never really dipped to 30. And that's because we're on a higher time frame, and we are, kind of trying to ignore the noise. We're filtering out the noise on higher time frames for people who swing trade, meaning they hold their positions for weeks or months, like I do. So I make a decision because I see that historically MU does not touch on the 4-hour chart at all. It doesn't touch that 30, or it hasn't, because we know that MU is solving a bottleneck. So because it has not touched, I know better than to wait for it to touch, because I'm gonna lose out on a run. So I know that for MU, my RSI should be closer to 40 or 45, or if you're not greedy, 50. If it reaches 50, I mean, it still can go way past the 70. And MU has, again, it will go up to 87. So, but the reason why we're using both 70 and 30 is because industry-wide, that is what everyone uses. And you don't want to be against everybody, because you're going to be by yourself, right? So we've learned so far that RSI at 70 means what, y'all? Collectively, Don't be shy. Okay, y'all being shy. Collectively, RSI means it's over bought and everybody and their mama is in the kitchen. And when it's under 30, it's oversold. That means too many people ran out and it's going to bounce in the opposite direction. That's all that means. The Bollinger Bands serve as support and resistance for a lot of things. You don't see, as you can see with that lower Bollinger Band, it has yet to pierce or even touch that lower Bollinger Band. You see that? It touched it and bounced off of it. So that means I may need to move my buy point up because it may not reach 825. It may not, and then I may miss out on a run from 825 to let me see, which the run was 156. You don't want to miss out really, but if you're following your fundamentals, which means I'm not going to buy unless it's meeting at least its historic lows. So its historic lows is at RSI 40. And I'm not going to really sell until it's graded. It has that yellow grade and it's at 83. I'm not going to sell. I may sell at 80. I may start taking profit. I mean, you may want to start taking profit, right? I'm up and I decided this week that I'm not going to sell. So I'm up several $1,000s in one because I feel that this one will continue to run. And instead of cashing out at, I think $8,000 right now, I would much rather wait until it can 3 times that because my contracts are so far out. Why would I rush to sell it? I may miss out on $100,000 if I sell at 8. All right. Any questions? We are in the last 10 minutes. Do y'all have any questions? I will definitely shoot you guys some information. If you send me your email address, please. I cannot upload large files to Instagram. But if you send me your email, I will send you some YouTubes that I'm obsessed with. Some information as I get it, that'll be perfectly fine. I am not a person that's gonna bug you, okay? Not at all. If I send it, I believe it's beneficial. And of course, like I said, I'm doing this because we don't need to be left out of a movement. Any questions so far? Any questions at all? Now, how do I pull? Oh, I know how. Mind your business. Uh-oh. But why is it saying this? Did we get it down? Is this? Nope, that's Apple
We
TV.
have it minimized.
Is that it? Oh, okay. And that ain't it. I don't know how to work this, y'all. This one? No, that's
Just minimize people.
oh, minimize Webull? Because I think I moved it.
Mm-hmm.
Oh, I can stop screen share.
Okay.
Oh, another thing I wanted to show y'all, just to let you know, we can't do all of this in one sitting, and that's just true. I know a lot of people were like, hey, are we going to go over this? Are we going to go over that? Well, guess what? This,
Showing. That's not showing.
it's not showing?
It's still Webull. So
It's still, okay, so do I need to, oh, yeah, because I did limit. I can close that window. Okay, I see everybody now. Hey, y'all. Now how do I was trying to figure this out before y'all got on here because
go to host tool maybe.
oh yeah. I was going to show you guys this document, this educational document that I've been working on and how much information is in it. So if people make you believe that you can learn all of this stuff overnight or in 2 hours, that is unrealistic and you will lose money. Which is why I felt like, splitting it up to just kind of basics and fundamentals and then kind of growing it from there is, the way to go. Okay, let's go to this one. And just to see, just for you, so you guys can see what, okay, move this out the way. Um, hold on one second, y'all. Can you see? No?
Yes,
Yeah,
I
you
can
can see
see.
it. Perfect. All right.
There you go.
So here's a something I'm preparing for a master class. And when I tell you there is more to this bid ask price, this is all, market related, NASDAQ, NYSE. It's a lot of information, y'all. It's a lot. Peg ratio is one of the hugest, big indicator or ratios that they use that institutions use to determine whether or not a stock is undervalued and whether there's enough room to grow. I even have information on here on, technical analysis, what are the candlesticks, which I don't recommend that you necessarily even try to learn the candlesticks. Just know the colors and know that a big body candle is a win in green and all of that good stuff, right? Because we're looking at the overall trend, and that's what we're going to look at. But I got, the indicators, essential indicators in the master class and all of this. This is not something we can go over in 2 hours. I tried. And of course, with options trading, delta, gamma, theta, vega, rho, implied volatility. You got to learn this stuff before you start hopping into options trading, which, like I said, is a tool to raise capital for long-term investments, which include dividend stocks and stuff like that. So this is just something that I'm working on, and it does have information about AI. It has the types of trading, swing trading, momentum, pullback, blah, blah, blah. I do a little bit of everything. Exit strategies. And what I like about it, and we will have this available soon, is, when it talks about AI infrastructure, it tells you what it does. So the layers of AI, the categories, the main companies, the representative names, the main companies involved. And then, of course, the thesis. What do you believe about this company? I believe that NVIDIA is the top company, is the top pick, is a pure play, and it's always the go-to for AI. What do you believe about MU? Well, it is a high bandwidth memory, and they're constantly creating more bandwidth, and these data centers is going to need it. It is critical, as you can see, for AI accelerators, and supply is constrained right now. It won't be after 2028, but it is right now, which is why this stock is parabolic. So all of this is, we have not gone over. This is the type of, the definitions and stuff that you would need to know, final glossary. And then, of course, at the bottom, it has my hard lessons. My trading plan, allows you to set or perform do a trading plan. Hold on, Sandy, because I want to take it out of focus. How do you take it out of, let me see. Hold on. I may not be able to do it this time, but so, definitions that you need to know. It has an area for personal, I have a dark screen on, but it actually is under white. You can see the lines and everything, for notes and to establish a trading plan. Let's see. Yeah. So you could see your trading plan, and it has a lot of area for notes and stuff like that. But Tara Trade's biggest lessons, honey. Ain't no lesson like a bought lesson. A lesson you paid for. And so these are my lessons. Patience. You're going to see me. I will say patience, patience, patience. Because remember what happened to old girl, Miss March. She didn't, number one, do what I recommend, what I do, which I, presented it as such. So she missed out on an opportunity. And when it went down, she was impatient. She was clamoring, and oh, I should have listened to my son. And I was like, I will never tell another soul about stock trading. But I'm so glad I was able to go back and say, now, had you done, because I'm a Libra, I told you so. Had you done precisely what I said, you'd probably be up several $1,000s. Okay, but 2 more minutes left on the clock. Any questions? Any final words of any advice that you want to give me regarding, my style of teaching? Anything whatsoever would be appreciated. I already asked you.
I don't have any advice because I think you did a great job. My sister shared it with me. I did get on a little late, so I
Okay.
do apologize. But I do have a question.
Okay.
One of my companies is a tax firm, and so I have a tax client who he does this trading, and
Mhm.
so he was like, "You need to get in some stocks." So he had me put some money in the Magnificent Seven. It
Mhm.
wasn't a lot. He was just trying to teach me how to get started.
Yes,
However, because it was such a small amount, do you recommend continuously buying more, or because that's where I'm stuck at? I can see it fluctuating. It doesn't fluctuate a lot because he didn't start me out. He was like, you're gonna put $25 in each one right
fractional
now
shares.
because I want
Mhm.
you to see what it looks like. I want you to, not be
Mhm.
scared of losing money or whatever.
Right?
But I
Right.
haven't put any more in. So this is my question. Do you continuously buy in the stock you have, or how does that work? Because I'm so very new to this.
I got you. There are two different ways to get started in investing. There's the investor, where you continuously put money in a stock or several stocks. I know our previous Federal Reserve chair, he only buys SPY, and that's heavy in Nvidia, heavy in the Magnificent Seven, right? You see it go up and down, right? So you know what stocks are capable of. And so what you're actually seeing, what you're actually asking is, if I would have put more money, I would have saw greater ups or greater downs, right? You don't want to just, I mean, it's okay to have a fractional share. And that's exactly what you probably have. You have a fractional share of a stock. And so when it moves $5, it may move up $10, it may move down $3, it may move
Right,
$10, that type of
right.
thing, right? So that answers your question right there. If I put more money, number one, can I stomach it moving down? If I buy the stock outright and it's $240, can I stomach it making a move down to 210? Yeah. Because guess what? That's your stock. You own a share of the company. This isn't options trading. This isn't where you own it for just 2 years or you're just leasing the rental property. And we talked about that earlier. This is a stock that you own. So you're good if it goes down $3, just like you're good. I mean, if it goes down $30, just like you're good if it goes down three. So I would absolutely, you can bet on the Magnificent Seven now. They carry the entire world. They are carrying all of us. I mean, China, when we close, the Asian markets are going crazy over the Magnificent Seven. When our markets close over here and it starts moving again and you see it at night, and you're like, whoa, look at you taking off. Americans are greedy because we sell as soon as they, we try to, scalp. But yes, to answer your question, you have a fractional share. You see it go up and down $3 and $5. Now, if you had a full share of one of the Magnificent Sevens, let's say at $240, you'll see that go up to $300. And you may make the decision to say, all right, I bought in at 200. Now it's at 300. I'm going to take my $100 and go on about my business. Or, if you're a trader like that. But if you're a long-term trader, you can see it go up and down. And one day that $200 may be 1,000. That's what happened to my mom's stock. And I'll tell you that story another day. But and it could go from 1,000 to, and that's one share for now 1,000. And because it is 1,000, the company could say, well, it's too much money for new people who want to get into this stock to spend $1,000 on a share. Okay, yeah. And so that company may say, I'm going to do a stock split. And now your one share is worth 10 shares, or you have 10 shares that was once one share. And so if you have 10 shares, and that does that over a period of time, over, a year, 2, 3 years, all of a sudden, like my mom didn't have $125,000 to put in the stock market, but guess what? When she just kept putting money in, she kept putting money into a specific stock, Home Depot stock, because she was a business manager for Home Depot, from her paychecks. They allowed them to buy the stock until one day, 7 years after she died, whatever she put in, which was probably a minimal amount, $20 a paycheck, turned out to be $125,000. And I was able to buy my first house with my newborn baby. So to answer your question, absolutely. Absolutely. And you want to do your research on mega cap companies, the ones that are too big to fail. Y'all remember too big to fail, right? Back in 2008, companies were too big to fail. So the United States had to bail them out. Yeah, certain companies are just too big and they're not going to fail, NVIDIA and stuff like that, unless there's an apocalypse. And you want to be consistent if you're an investor. If you are a trader, you can do the same thing with that same share. Buy shares, and then 3 months later, when it's at its upper Bollinger Band on the 4-hour chart or the 1-day chart, and you see it up there, and you're like, okay, I think people are going to start taking profit. They're going to start paying themselves. You may want to sell when the stock goes from $200 up to $500 and pocket that money and send it to your account. Jennifer, you got a question, baby doll? What you got? Is there a dollar amount that is reasonable to start with? I don't want to give off false hope, but I will say I remember trying to prove my girls on Instagram a point. They said, "Oh, we don't have Tara money. We got sincere money," is what one of them told me. And they said, I said, okay, I'm going to prove a point. I'm going to liquidate my entire account, send it to my bank. I'm going to leave $500 in this stock. It was NVIDIA. And I did. I left $500. I bought a contract out and for $500. And this was June 2nd of that year. I remember dates. By June the 30th, I had made $10,000 because NVIDIA exploded off a $500 investment. To answer that question, I'd have to ask what stock you're looking at. We would have to talk about stocks. We would have to go into details. We would have to look at, number one, contracts. We would have to look at, if you're doing contracts or if you're doing stocks outright. There are bottleneck stocks that are not expensive at all right now that it will probably go parabolic. I will send you all a list of those stocks so you can look at them and put them on your watch list. I mean, stocks that are like $10 a share, $30 a share if you buy 100 of them or whatever, that's how much you need to put in. If you buy 20, you don't have to buy 100. I'm just kind of stuck on 100, but you don't have to buy 100. You can buy about 3,500 of one because it was dirt cheap. It was 15 cents. And then 15 cents. It was 15 cents, remember? Yeah. And it went up to 91 cents. Now, that's more than triple, quadruple what I bought it for, So no, there's not a specific amount. There's you would determine the amount based on what you're looking at, right? Like I want to buy 20 NVIDIAs. 20 NVIDIAs will cost me, $1,000 or whatever. I mean, $2,000. Yeah. So that's, but if you want to buy a contract instead, like I said, that 100 shares that you are leasing for a year or two, that's $4,100. I put in one for Poet, POET. It solves a bottleneck. NVTS is a energy company. It was $8 per share. Now it is $22 per share. If you want to buy 50 of those, you calculate, that's how much you're putting into that one, So it's no clear answer. It's just based on what you're looking at. How much is that stock? Have you researched that stock to know that that stock is going to take off? And I'm going to give myself the patience that it takes to see it through, right? You don't want to invest anything you can't lose, right? And because we have to say it, we have to say it. Even though Nvidia is a $1 trillion company, all stocks have risk. If there's an apocalypse, if Nvidia does something crazy and becomes like corrupt or something, yeah, I guess the stock can go from 5 trillion down to 800 billion, and then that would make you lose money as well. Has it done that? Absolutely not. They have the most integrity I've ever seen in a company. Very I have disclosures and stuff like that. You can see it in that 10K. So yeah, to answer your question, it's not a specific amount. It's just based on what you're comfortable, what you're looking at, what all this and that. Any other questions?
Did you put the information up on how to get started with you?
Oh, well, not with me. Well, you're not really getting started with me. I will, if you send me an email, I will put brokerages that I use so you can open a brokerage account. Robinhood is the main brokerage. I do have holdings in other brokerages because they don't offer the stock on, or they didn't offer the stock on Robinhood at one point. But I will send me an email. What is it? Latara, do lovely Libra, lovely Libra 107 at gmail.com. And I will send you videos. I will add you, so I can send you videos that I watch to get, understanding of investing. I will send you a list of stocks that are on my watch list or that I already have a position in. I already have a position in Poet, already have a position in NVTS, which is a bottleneck that's solving the energy problem that we're having with data centers. I will send you all of that information, okay? And then if you have questions, the email is in the chat. And if you have any additional questions, I'll try to answer those via email as well. So just send me whatever you need. And of course, if you follow me on Instagram, holla at your girl, like y'all do in my direct message, okay? My Instagram is Latara J. Harris. That's my Instagram. So if you want to send me a DM, you can do that as well. But I'm going to try to send as much via email as I possibly can. And then the next course, and we may have to do another introductory course because the foundations are that important. But I do want to move to advancer trading once, because I do want you guys to also not only set up a watch list, I want you guys to start trading fake money, if you will. But we have to get to that, how to trade the fake money so you could see how much you would have made if you would have put real money in. Paper trading is what they call it. So send me your email, send me an email. I'm not going to spam you because I really am not that interactive, but I do want to provide as much information as I can. And what helped me be self-taught, because I'm self-taught. I could not rely on the streets to teach me because they were starting in the middle, and that was problematic. Any other questions before I let y'all go?
All right, everybody. This is Sincere, Latara Harris's daughter. I have put her email in the chat as well as her Instagram handle. Please be sure to copy and paste that, save it for later. Thank you guys so much for
Reach out
joining
to me,
us.
for sure. Reach out to me because I have the ABCs saved for stock investing. If you came in late and you didn't get the full spiel, I'm going to also try to attach the PowerPoint. Okay. Oh, you are most welcome. You are most welcome. All right, y'all. I want y'all to have a good rest of your evening or afternoon, excuse me. Have fun. Don't think too much on it. There's nothing that we can't review. I may have a quick review next week because I know this is information overload, okay?
All right. I have made an email list for everyone in the chat that provided their email. You will get the recording sometime today or early tomorrow morning.
Perfect.
And For those of you who did not put their email in the chat, please copy Latara's email and send one saying that you would like to request the recording for this class. Alrighty.
All right, y'all. Have a good afternoon. Love you. Mean it. Be safe. Are you still in?